This is the Friday, April 26, 2019 version of the Market Plus segment. Joining us once again is Shawn Hackett. Shawn, welcome back.
It's great to be back.
Okay, Shawn, what's going on? Break it down for us in the cotton markets this week.
Well, let's figure out where we started from. We started with this planting intentions report that was down from last year when everyone thought it would be up, and it set this market off in trying to buy acres. And it looked like it was going to do that. We're starting to ease back, and then all of a sudden we're getting this massive, massive rainfall in Texas, the deep south, and it looks like it's going to get worse. And now the market's saying, we priced for acres, but are we still going to get them? And so the market is really concerned about this, and I don't think it's going to get its answer until maybe mid-late May. And so I think the cotton market could probably head higher, maybe low 80s, before it finds out whatever it is, and then it could probably buy the rumor, sell the news. But cotton's one of the few markets that actually has been trending higher and probably still needs to do that to take care of this weather problem that we're dealing with.
Because we probably won't find out final planting until we get a report out later this summer.
Well, certainly late June we get an idea, but the market will start to get private reports about what was done or what was not done.
Okay.
And so I think the market will start to get a sense for it in late May, but of course more official results won't be till late June.
Okay. Okay, we've got to talk about the U.S. dollar. It's been a crazy week. I think they're at almost a 2-year high, if I'm not mistaken. Shawn, what's going on with the U.S. dollar? How much higher can we go? Or is it maybe now a reversal? Well,
I mean, we made a marginal high, and we're really at this area where we're either going to just really rocket higher or fall back down. And what seems to be going on is this whole Brexit thing has caused a lot of capital from Europe who's afraid what's going on there to kind of find a safe haven in the U.S. dollar, kind of fleeing Europe. And it's been driving our market higher, hurting things like the Brazilian real, which is so important to how we compete down there for exports. So we're hopeful that maybe the Brexit thing's going to calm down. And obviously a trade deal, which was originally what's got the dollar becoming stronger, any kind of good news there might set it back. But today's reversal in the dollar, we had a good GDP number. It spiked and then immediately reversed down in sort of this head fake. And so sometimes that's a market that is put in a top and maybe we're ready to work our way back lower. But it really, really needs to do that if we're going to get any momentum going in our markets beyond short-term short covering.
Okay, we've got a question here from Phil in Dresden, Ontario, addressing some of the U.S. dollar. And you've answered part of his question here. It was the U.S. dollar has been buoyant lately, which can be bearish for U.S. wheat, corn, and soybeans. What are the fundamentals behind the U.S. dollar? And I think this is the important part here. Will it impede ongoing U.S. and China trade negotiations?
The U.S., I don't think it'll impede them.
Okay.
The U.S. is interested in how the renminbi, the Chinese currency, is relative to the U.S. dollar. The Chinese currency has been doing fine. It's not been weakening. It's been pretty strong. And we're trying to work out an arrangement where they won't devalue the Chinese currency to gain economic and export advantage. So I think that the strong dollar is more about a euro problem, not a China problem. So as long as that's the case, I don't see that being an issue with getting a trade deal done.
Okay. But then when we look at it from the export side of things, we're already seeing slow export sales. Can they get even slower because of the U.S. dollar?
Well, I mean, look, if the U.S. dollar stays strong or goes stronger, they could come under greater pressure. I mean, right now there's available supplies elsewhere, and until those supplies are, kind of worked down, any economic advantage that they gain from the real continuing to fall, we hit 25 today, which we hadn't seen in a long time, it doesn't make the export picture any better. So the only thing that might improve exports is if we get a legitimate weather problem. People are worried that maybe our crop's going to be smaller. You could get some buying rushing in. But right now, the dollar needs to come back down to get that export thing going. And so it's a big problem that we need to get resolved. And hopefully that can start to happen.
And if we do get the U.S. dollar to back down, well, this is my last question, I promise, on this. If we get the U.S. dollar to back down and we start to see maybe some exports pick back up, will that add a little bit more positive sentiment back into our grain markets?
Undoubtedly. Look, I don't know what the algorithms have in their equations, but without a doubt, currency is one of them. And we know they're taught if the dollar's strong, you sell, if the dollar's weak, you buy. And so there's going to be X amount of those speculators, those algorithms that are going to buy on a weaker dollar, which will help lift some of the current prices out of the bottom right now.
Okay. Another interesting question when you look at what's being factored into the prices right now, especially in the grain markets. Chad in Minot, North Dakota said, how much of the price lost is politically driven and how much is fundamental? And then second part of that question is, have the world supply and demand numbers changed that dramatically over the last year to account for where our corn and wheat market is now at?
No. I don't believe that they have. The reason that we're down here is because because of the dollar that we've been talking about, because of disappointment over trade not moving forward. And so it's brought, like I said, these computer traders just keep pressing the market lower. But we don't really have anything that's dramatically different. I mean, we've been talking about 1 billion bushels of soybeans for months upon months. You know, we had a little bit of a larger corn number, but we could easily see that number coming back down with less acres and such. I mean, and really the wheat ending stocks are not that far different. So the reality is no, but the sentiment's gotten much worse. And it's really a function of just tiredness, impatience, and the algorithm seeing, flesh, seeing a trend and just continuing to press the trend because that's what they're taught to do.
When you look at sentiment, Shawn, you had a newsletter this week that talked about the negative sentiment. And to be honest, you're one of the more bullish analysts that we have. You maybe bring a little more optimism with you when you come to the show. Are you also changing your story now to be a little less bullish about the grain markets?
I wouldn't say that I'm less bullish. I mean, usually the greater the negative sentiment, the closer you are to a bottom. We are starting to see and have seen some very significant insider buying based upon the algorithm that we use. In fact, I just eyeballed the numbers today, and it's very possible that we could trigger a buy signal for the entire grains complex, the first time we've had one since January of 2018. We go by indicators to tell us should we be bullish or bearish, and I feel bearish. I see how bearish everything is. Everything looks so bad. But I do know from all the years and 30 years I've been looking at markets that the greater the negativity, the greater the chance that you're at a low and something good is about to happen. So I've not taken away from my bullish, but I also understand that just because you're cheap, just because bearish sentiment is high, doesn't mean you have to turn up right away. It can go on for a while. But we're definitely at one of the worst sentiment readings I can remember. Probably 2005 was the last time I remember seeing this kind of morbid sentiment right now.
With that being said then, Shawn, is there anything to be optimistic about in the commodity markets right now? Something to give producers a little hope?
I think, for me, the corn market probably is the market that has the best chance to provide hope for the grain markets because there are really good things going on under the surface. We have this African swine fever, which is going to produce record animal feeding units in 2020 globally as these prices stay high. That's good for corn. We know the Chinese are chopping away at their corn stocks because of ethanol production. In fact, this past year, 25 million metric tons of corn stocks drawn down, and that's after importing 5 million into the country, and it's down 55 million metric tons over the last 2 years. So the China inventories are rapidly falling, and we can just see 2 to 3 years down the line, they're going to be at a level where they're going to have to buy a lot of corn from the rest of the world. So those are really positive things that won't impact the market necessarily at this second, but they're continuing. And the market sooner or later will start to pay attention to it. I think the corn market is probably the one that's going to take this negative sentiment and turn it around a little bit.
Okay. When we're talking about the corn market, we've got a question here from Roger in Kokomo, Indiana. I think he said, will China ramp ethanol production quick enough to use corn? I assume he means for ethanol and not feed. And could they be export competition for us?
I don't really see that happening. I mean, right now they're drawing down stocks so rapidly. Even if you look at some reduced feed demand this year, 8 million metric tons of lost corn feed demand, the way the ethanol production is growing, we're still lowering our corn ending stocks by 25 million metric tons after they imported 5. So at that rapid rate of reduction, I don't see any appetite for them wanting to export corn anytime soon, so I do not see them being a competitor. I see them being a buyer.
And I don't think that they have the capacity to produce that much ethanol as is.
Well, I mean, they're ramping it up. I mean, they have they're every year they're putting more production in place and they're ramping it up. But no, they still don't have that capacity. That's correct.
Okay, final question for you
Sure.
here. We've got Gary in Wilton, Iowa, talking about planting because that's on the minds of many producers. He said planting is going strong, but thousands of acres won't be planted. And we've got a long way to go till we get to harvest. Why are crops tanking so much now? And can you understand some drop, but a lot? But I don't know.
Right.
I'm not sure what the second part
It's dropped more than one would think.
Yeah, right.
Look, rain makes grain. That is the mantra that the funds and their algorithms have built into their algorithms, and we know, and they see all this rain, abundant soil moisture. We know rain makes grain most of the time. Not all the time, but most of the time. And they're assuming it's going to do it again until they're given a good reason why it's not. And that's why we think going into May, we may get that reason for them to say maybe we are wrong. Because this kind of weather scenario that we're seeing going into mid-May, we feel is going to finally draw the line where we're not going to get all those acres planted. Corn acres are going to be down, and there is going to be some issue with what kind of yields are we looking at if not all any hydrous was put down, you know, and the rains continue. Remember 1993, which was a year that we had a lot of rain and it didn't make more grain. That was a flood that started on June 1st. It was a summer flood, but it didn't make grain. If we have this kind of a spring and that continues into June or July, rain may not make grain, and all these short speculators that are out there may have to admit that they're wrong, and that could create a wild move higher. And we think there's a really good chance we might finally get to that point. But right now, they're still saying it's going to get done, rain makes grain, and there's no reason to change our mind. And that's what we're dealing with until they say otherwise.
Okay, that's what we're dealing with. Shawn Hackett, thank you so much.
Thank you.
Join us again next week as we look at another battle brewing over water, this time in the heartland. And Darren Newsom will join me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.